All right, good morning. How's everybody doing today? Happy May, end of April, beginning of May. Looks like everybody's getting ready for another exciting month in the markets. So, with that said, my name is Jared. It is May 3rd, 2021, and this is Engineering the Markets. Let's go ahead and get right into it. Starting off with our SPY. So, as we've ended April, we want to take a quick look at our monthly chart for a lot of our indices and just kind of see where we are in relation to where we've been. We can see that the SPY continued to move higher throughout the month of April. April was actually a relatively strong month overall in the fact that the SPY opened and closed with pretty much a full candle. We have a little bit of a shadow near the top of the month, but overall the structure of the SPY in just the month of April was strong. So when we look at this structure, we say, okay, SPY is still moving up, SPY is still strong. However, where are we in the chart? Well, relative to our moving averages, relative to positionally where we've come from, we are a bit extended. We're seeing that the 20 and the 50 are way below us. We do have the potential in a trending environment to always sort of back test these larger moving averages. And just overall, we haven't seen a lot of pullbacks as of late. Most pullbacks have been bought pretty aggressively, and the pullbacks that we have seen have either been shallow or more of a consolidation. So instead of correcting by price, we've seen more corrections over time, and the prices move significantly higher from those corrections. So picture is that the context remains bullish in the SPY, but we are at extended levels. And when thinking about your trades or even your investments, you want to always take note of this and say, is this the right time to be entering certain types of trades? Should I be full on bull, even though we're extended? Should I be sort of cautionary bull, maybe a little bear, sort of mix and match depending on the context of the chart and your technical analysis. And as we get into our weekly, we can see a little bit of a cautionary tale where the weekly has remained in balance for about 2 weeks prior. The last week that we just closed actually ended in an inverted hammer, some sort of shooting star structure. And simply, we want to take note of this. We are saying to ourselves that in the past 3 weeks, the SPY has set a range. And in that setting of the range, the last week attempted to get out of the range and failed to do so. So from a failed breakout perspective, from leaving balance or just some sort of range breakout, a lot of those signals have not shown themselves yet. And in fact, we're getting the potential for a failed breakout to come down and back test the lower end of the range, which is what we're prepared for. We've been discussing this in multiple sessions in the case that the market does want to pull back. So we simply note that on the weekly. We also note that the 20 is sitting a little bit below us. We are in some corrective risk. If the market were to pull back, the 20 would be an area to consider. And then obviously the 50 and the 200 sitting way below us. And then we dig into our daily. Now, the SPY is showing some interesting structure here, more nuanced than the weekly, but basically the overall scenario is exactly the same, where the SPY had this lower range, and this was during the time of some of the news about the Biden administration potentially upping the capital gains tax. We saw some volatility in this session. We cleared out of this range, but then we formed this very tight range over the course of 3 days, where the market not only remained in balance, but wasn't really offering a lot of range overall to trade intraday. We saw maybe a $2 to $3 range that the market continued to test to the upside and the downside. On Thursday, we finally were able to clear that range. And in fact, through that session, we came all the way to the bottom end, back tested, and then closed near the highs. So obviously, from that simple perspective, it looked as if the market wanted to go higher. We saw a move away from balance after a nice back test, and that signal should have continued higher. But what's interesting is that on Friday, the market did not continue higher. So in your analysis, always be thinking about what the most likely scenario should be based on whatever signals the charts are telling you. If you see a range break out, and then that range breakout comes back into range or back into balance, you need to be asking yourself, why did the market do that? Did it do it because technically there wasn't enough buyers to continue moving the price higher? Did it do it essentially as some sort of trap to the bulls or the bears, depending on the breakout? And ultimately, what do you expect now that that range is still back in play? Because if we were to move away from the range, we can sort of use it as a shelf of value and expect prices to go higher. But what happens if you come back into it? And what happens after that point if you lose the bottom of the range? These are things that we as technicians need to always be asking ourselves as the charts evolve. Not what we bias ourselves towards, but allowing the market to tell us which direction it wants to go, and not going in with a bias that sort of removes any of the market generated information that the market is giving us each and every day. So the SPY so far is still in this balance area. And as we sit in pre-market, we see that we're once again in this area where markets could go higher, markets could go lower, but they're not really breaking any key levels. Now, we are sitting above this tight range low, which sits about at 416.30. And then we're also sitting slightly above the tighter range high, which sits around 418.70. So ultimately, today should be an indicative sort of day if we can start to move away from that range. But until then, we, in the case of balance, remain balanced, and the market has not yet decided which direction it wants to choose. Some things to note about balance as we get into some of the other indices today. As the market remains tightly wound, what is occurring throughout intraday sessions is that more and more market participants are placing different types of risk parameters at these levels. So for example, if you're a bull, you're looking at this and saying, the trend will continue. I expect this range and this balance to break higher, and therefore I'm placing some sort of directionally biased bullish thesis into my portfolio. Whatever size you are as a bull doesn't really matter, but ultimately your directional bias is still to the upside. So that risk starts to build. If you're a bear, you're doing the exact opposite. You're saying the market is a little too far, too fast. You expect this balance area to break lower, and you are similarly putting on your risk at these levels. What is going to happen at some point is that when we break away from this area, all of the market participants who were defining their risk are going to begin to unwind. Now, if we break bullish, bulls will obviously either hold or take profit, add into the momentum, and look for higher targets. Bears will begin to stop out as their thesis has been proven wrong. And then once again, to the opposite direction, we'll see the balance shift in the bears. If we were to break lower, bulls are going to get stopped out. Bears are going to take profit or add to the momentum. So the longer we stay in these ranges, the more likely that our move away from balance will be met with a strong directional bias. The idea is that as you stay in balance, the more and more risk gets defined. And when that risk finally comes undone, you'll see things like hedging, or you'll see things like volatility start to expand. And when that occurs, that's what gives us that nice range expansion in markets. It gets us trend days either to the upside or the downside, and ultimately we can take advantage of that. So some very basic criteria for what we're seeing in a market that continues to sort of be in lockstep with these key levels. At some point, there will be a winner, and that winner will give us opportunity in either direction. So we will wait patiently until that occurs. Obviously, we are seeing some volume start to pick up over the past 2 sessions. So we are expecting some decision to be made likely today or tomorrow. If not, then we'll continue to just analyze who's winning and what sort of false signals we're getting as some of those levels try to break and obviously would fail. So that's where we are in the SPY. Let's see where we also see some opportunity and what sort of analysis we can gain from other indices. If we look at the Qs on the monthly chart, we see a similar story. The Qs have been very strong over the past 2 months. We saw some volatility in March, a pretty significant pullback met with a lot of strength and dip buying into the end of March and the beginning of April. And that momentum led to an all-time high in the Qs. Now, what's interesting on the monthly is that the previous all-time high and the close of this current candle are actually, the close is not above that previous all-time high. So if we look at our previous all-time high on the monthly, we're seeing 338.19, and the close last month was 337.99. So we have this potential of the Qs, once again, trying to break all-time highs and to some degree having a little bit of trouble really breaking out and closing higher. We're actually seeing a little bit of another pull down back into what is a very large monthly range. If we were simply to define it as the high of the February candle and the low of the March candle, technically we have not broken this range yet. We have attempted to and then pulled back in with a close lower than the previous high. So something to take note, as these markets are extended, we're looking for reasons to consider taking profits or potentially looking for different sort of scenarios, different opportunities either to the downside or even with ranges starting to define low to high, high to low scenarios. Ultimately, those are going to be the opportunities that this market will provide if we see a continuous consolidation over time. As we get into our weekly, we can see more of that nuance where the previous all-time high of the Qs, we were able to close a weekly candle above that all-time high, but you can see that over the next couple of weeks, we actually started to pull back in to range, and we're seeing, once again, that well-defined structure of the market not necessarily going higher from here, but also not giving us a deep pullback. So our scenario is such that we may have a potential bull flag that is starting to build energy to the upside, or we could simply have a failed bull flag that would like to break lower, give us a deeper pullback, and then we'll be scouting for more significant support areas to the downside as the market is still in a bull trend. The Qs also notably like to pull back to the 20 moving average on the weekly. We see a lot of significant support in previous pullbacks. Doesn't always have to be perfect and can be slightly volatile, but ultimately each of these has been a successful bounce point leading to new highs in the Qs. So we want to continue to keep that in mind, especially if we continue to keep a more bullish thesis throughout the market itself. And as we dig into our daily, we see the Qs once again with additional nuance of this double top all-time high area having a lot of trouble breaking higher. We saw some volatility in the Thursday session, met with a candle that, similar to the SPY, sort of a breakout and fail, a failure to expand the range higher. So we did close back into range. And as we sit on the 20 moving average on the daily, we're simply trying to see, is the structure of this market to where bullish momentum traders are pushing the price higher, or are bullish dip traders waiting for a deeper pullback? At some point, there will be a balance shift. And ultimately, if the momentum buyers are gone, if they're starting to take profit or simply not stepping in any further, we will wait for a more significant dip buying event, something that comes to a deeper support zone and sees a strong reaction from more patient bulls. Now, this can lead to some short-term bearishness. We can look for momentum, sort of aggressive bears to step into that momentum, and we'll see ultimately who wins whenever we get to a deeper support zone. Now, the Qs and the SPY sitting at these key levels, we're pretty much at all-time highs. Who is the odd person out? In this case, it's the IWM. So we start off with our monthly. Zoom it in here and clear this line. When we look at our monthly chart, this can give us that scenario of, on the highest time frame, at least that we're considering, who's in control. I would say that so far, bulls have been in control for multiple months. But over the past couple months, the tone of this market has shifted. We see that in the month of in the month of March, we put in this sort of indecision doji inside of the monthly. We did make a new all-time high, but we also had a pretty volatile downside leading to those upper and lower shadows or tails in the candle itself. And as we look at the month of April, we see that not only is it an inside bar, but it is once again very indecisive. We don't necessarily have a strong inside candle to the upside, nor do we have a weak inside candle to the downside, more of a doji. What we're looking at here is that this market is potentially starting to distribute. And if that's the case, we are having market participants either indecisive about whether to continue prices going higher, or ultimately some of the profit taking is occurring, met with sellers, and then, fought against with momentum buyers, people sort of buying some of these more shallow dips. And that leads to a lot of back and forth, a lot of range-bound trading. When we get to our weekly, we note that obviously for a long time we've been trading in this pretty well-defined range, albeit large from the perspective of intraday traders. A lot of volatility in these ranges. We had our notable break above the range and then failure, which led to a back test of the lower end of the range. This is a very clear example of when failed breakouts occur. The most likely scenario is to come back into range and test the other side of the range. So we had our lower range set and we came back, tested it once again. And now as we're sitting somewhere in the middle of the range, we're seeing once again a weekly candle where we're having a lot of trouble getting outside of some of our inner ranges. And as we dig into the daily, we'll see that range even more clearly. Now, for a period of time, as we get into our daily perspective, also notably the 20 on the weekly, acting as a short-term area of support. For a period of time on this daily perspective, people were calling out the potential for a head and shoulders. We have our head structure here. This is our failed breakout on the monthly. We have some sort of shoulder structure in here, essentially starting to define itself as a lower end range. And then we had this shoulder here starting to form. We saw a potential rejection of that shoulder, which should have been a bullish sign. If you have a failed bearish setup, you typically are looking in the opposite direction, saying that the failure will lead to sort of the opposite thesis. We saw that momentum lead us to slightly higher prices and this inner range starting to break bullish. And then now we're pulling right back into the range. So what's the concept here? What's the idea? The idea is that we're getting a lot of mixed signals. There's not necessarily a clear trend in play. There is a lot of false breakouts of both larger ranges and smaller ranges. And some of this momentum that we're seeing in other markets start to fade is coming into the IWM, even though the IWM is not at all-time highs. So carrying this forward, we simply want to stay on guard, as the IWM has been one of our better leading indicators of a strong economic recovery and a strong overall market, where we saw the entire 2021 Q1 period being led by the IWM. And even amidst some of the volatility in March, the IWM has provided some really strong opportunities off of some of these zones of interest. If the IWM is starting to show the opposite, it is possible that the SPY and the Qs are also starting to lose that momentum. And we simply want to be patient and see, can we get a deeper pullback and define our risk better in the overall markets? Can we get a pullback and see that pullback be met by strong selling volume, the potential for a bounce and maybe even a lower high? That could lead to some sort of short-term trend reversal in the markets that we can play. Or will this pullback simply be bought, as most pullbacks have been, at a very shallow support zone, and more momentum will follow? All three scenarios are on the table, as the market really hasn't shown us the potential for those yet. We're trying to find the answer at this point. So we will remain on guard moving into May, given that the market is doing what it is doing. We're not biased in our overall approach. We are allowing the market to tell us what direction it wants to go, and if that direction is going to be met with the right type of market participants: strong sellers versus weak sellers, momentum buyers versus dip buyers, et cetera, et cetera. So with that said, what are some occurrences that occurred on Friday last week that maybe give us a little bit of additional caution to watch out for? One that I found quite interesting was we did see a large uptick in the dollar. We had drawn out a very rough trend line using the previous low and a previous higher low that led to a higher high as sort of a general area of support. The market did not necessarily have to come into this area, but we expected a lot of this selling to at least be met by some sort of short-term bounce. And what we did see is that while it didn't come into this line perfectly, we did see a very strong reaction on Friday. So once again, we're using the dollar as sort of a leading sort of fear gauge. If market participants are coming into the dollar, and if there's some continuation to the upside, we want to stay cognizant of that fact, and also a little bit cautious to the equities and commodities markets, which are heavily affected by a strong versus a weak dollar. Did we see volatility rise on Friday? I would say that the answer is somewhat mixed. If you were trading intraday on Friday, you may have noticed some upticks in volatility throughout some of the last couple of hours of Friday's session. But from the perspective of the daily and overall the entire perspective of the VIX over the past couple months, we remain fairly compressed to the downside. Obviously, there has been a low set around 1538. We have not come to test that low, and so far we have been making slightly higher lows since then, but we haven't also seen a sharp uptick as of yet. So as we move into May, if this were to start to move higher, especially on a large push inside of an intraday session, we'd want to see the market react to that. Maybe moving away from that tight range, maybe having a lot of sectors move in one direction at the same time or on the same day, and ultimately just seeing a shift of balance. You know, someone is now starting to win, and that winning is moving the market in a directional sense as opposed to keeping the market range bound, which leads to compression of volatility in most cases. And then oddly, as we shift into some other areas that we'd like to watch, we are seeing the bond market having a slight upward move inside of its treasury index rates, but overall not really a significant move higher. We're seeing the TLT, which is the 20-year bond ETF, holding some of this previous support that we had defined based on the weekly charts, hitting the 200 period moving average. But obviously not really seeing a ton of follow through yet. This is mostly consolidating inside of these lower ranges, and we'll see if this is met by, once again, some sort of fear-based shift in momentum, leading to market participants either buying bonds or reacting by selling bonds if the equities market were to explode higher. And our last sort of odd man out, what is the market showing us versus what is our bias, or sorry, what is the market showing us versus what has been our overall bias over the past couple months. We're seeing sectors like utilities still stand out as one of our strongest sectors. We had a nice pullback in utilities at previous highs, came into our 20-day moving average, and then we're seeing a nice Thursday and Friday trend day reaction off of this area. If this continues, we want to simply take note of it and say, why are utilities outperforming the overall market? Does the market, or is the market showing us a sign that participants are starting to shift into more risk-off sectors? And that's complemented by things like real estate, which have made a new monthly all-time high, weekly, daily all-time high in general. And with the monthly perspective, this is actually closing at a new all-time high, a very strong signal overall from a technical perspective. We can see that on the weekly as well. So as we get into May, the overall theme is the same. We are looking at the market and saying, which direction do you want to go, Mr. Market? The question has not really been answered yet with any sort of technical decision, but we're seeing signs of a shift. We're seeing signals that the market is throwing saying, hey, this upside may not last, and if it does, there is a need for some sort of correction before it continues higher. So we want to take that in mind, and if the market does the opposite, we also want to jump on board with some of the momentum that the market has been giving us, get a little bit more of that extended overall push to the upside, and then once again establish a game plan as we get to more extended levels. No matter what scenario plays out, we are trying to be prepared. We are looking for opportunities in either direction, or in the case of range-bound trading, we want to take advantage of those ranges while they last and use that information of, did we expand from the range? Did we come back into range? Are we pulling back to the low end of the range? Look for that bounce. Are we coming into the upper end of the range and have not broken it yet? Maybe look for a rejection before the breakout. Those sorts of scenarios can be played intraday, multi-day, or ultimately can provide us with the opportunity to hold in cases where this market wants to continue higher. But we're also prepared for the opportunity of a downside move in the case that the market gives it to us. So with that said, let's get into May with a game plan in mind. Let's stay focused on what the market is providing us. And overall, let's take advantage of these opportunities as they come. We will continue to note these throughout the week and also talk about how to take advantage of some of these opportunities as they show. So with that said, I'm Jared. This is Engineering the Markets. Trade safe, have a happy Monday, and welcome to May. Should be a fun and interesting month. All right, take it easy. See y'all tomorrow.
All right, let's try this again. Good morning, Norm. Yes, I had a good weekend. I had a busy day yesterday, but overall a good weekend. And yourself? Oh. Yeah. Oh, well, they should be able to now, I think. I did. Oh, wait a
All
second.
right.
No, wait. There we go. Let's try that. Too many buttons.
Well, hopefully they can hear me now. Let us know if it doesn't start working. Anyway,
Yeah, it's funny. It sounds like such a foreign concept to have 20 people at your house. To me, like I've been in lockdown here for
well,
so long.
some places that would be a felony, right?
Yeah, well, it's
They would
like
actively come kick your door in, and
here, like we have neighbors, reporting on neighbors if you even have people for drinks in your garage or in your driveway because it's not allowed by local regulations, and some people take it extremely seriously. So it's just strange. It's very strange.
crazy world for sure.
Yeah, well, speaking of strange, let's talk about the markets. It's funny. I had a lot of driving yesterday. I had to pick up my daughter from school, from university, and I was listening to some podcasts on the market, and one of them said that right now the market is acting a lot like it did in the 1920s. And I thought that was a weird concept. But then when he went to explain it, said, in the 1920s, retail trading actually became very big, and some of the big money backed off. And you had these bucket shops that were opening in hotel lobbies and all over the place because it became it became trendy, if you will, for the common folk to trade. But the big problem was that the big money backed off, which created a lot of choppiness in the markets, and led partially to some of the issues that they had in the downfall with the depression, the market-based depression. And I thought, I don't know, I'm not sure how far to believe that thesis, but I thought it was an interesting perspective because we're certainly seeing similarities, of course, with Robin Hood and people, a lot of sort of what we call, I guess, dumb money in the markets, moving things. And we certainly have seen it be choppy.
We're not. Let's clarify. We are not calling it that. That is overall
No,
what the industry calls it.
right.
Wall Street calls it.
Yes, exactly. So, yeah, that's true. I don't mean to. People get sensitive to the term, but it's funny. That's the old term for that Wall Street used to refer to it by. So, but any event, so we'll see what happens. I mean, Norm, why don't we start there and let's see if I.
Well, let's just hope we don't have a repeat of the 30s.
Yeah.
All right. Yep. So Jared did an awesome job of outlining what's going on, what's been going on in the market. We are at a consolidation point here. We'll see if we can break higher. Overall, strong month in April. Put in a strong monthly candle. Well, essentially a solid bar from bottom to top, which is generally, showing some strength. However, if you break it down on some shorter time frames, there was a little bit of weakness that crept in, a little bit of consolidation the last couple of weeks. So we'll just have to see how things go. Obviously, sitting in May, you've got, once again, referring to Wall Street and how things are spoken about there. The old cliche of sell in May and go away, meaning, the summer is usually not a great time period for the market. So we'll see how it goes. Last year was really different. Today we've got market manufacturing PMI at 945. Sorry, it's misspelled. MARKIT, manufacturing PMI is what it should be. ISM manufacturing index 10 a.m. and construction spend as well.
Oh, that's my bad. You're right. Spell check must have corrected me, even when I didn't want it to.
That's all right. It happens.
Oh,
At least it didn't put in any of those dirty curse words you use all the time.
that's true. That's true. I am bad for that. All right. So why don't we start looking at some of the things that are moving? And I haven't really had a chance to look at much of anything, but I'm seeing some familiar ticker symbols here. Guys, I know that usually when I have this display, it can sometimes be a little small in some of the areas. So I've done my best to make a nice big area. When you see our stocks that we're going to be watching, our scanners, are going to be a little small. I can't change the size of that, but I have increased the font on our list, which is in the top right corner of this screen. So let me know if it's not big enough. We can make it even bigger. So hopefully this will be enough to see. Let's start with at the top of our gappers list. Oops, I thought I was at the top, but apparently something new is coming into the mix. AIH. Did that just pop in there? I see.
Yes. It's been in there for a bit.
It's bouncing with BTX. That's why. All right, let's start with AIH then. Doesn't look too bad. We got some volume, 600,000 shares. Wow, 29%. What is going on with AIH today?
This is a Chinese medical company of some sort. They put out some financial documents late on Friday night. Note that while their float is just over 22 million in trade ideas, it is 2.64 million in FinViz. Not sure which data feed there is correct, but big pop for them this morning.
Yeah, I was going to say they're not a low float, but yes, if there's a little question on that, we'll have to watch and see it. It's really, despite the fact that it's up 29 or 32% now, we have to remember
Peter, is it possible your gappers list, specifically the up gappers, is off the screen, cut off halfway? Can you fix that by chance so people can get the full list?
Oh, well, yes. One sec. Why is that? How about that? A little bit better? Hopefully people can see it.
Yeah, there you go. Perfect.
Sorry about that. Okay, yeah. So we'll have to be careful on AIH. It sort of at initial glance it looked okay, but now that I'm watching it, it sort of is moving sideways here in a range. I mean, Friday it closed at $6.70, so it just makes our list here. I don't know. I'll leave it here for now. We'll see what happens. If it doesn't start to show better movement by the time we get to setting levels, I may demote this one, but for now I'll just leave it up here. BTX is the next big mover here that, again, in terms of percentage changes, bouncing back and forth with AIH. I've seen this on the list before. I can't say I've ever traded it, and the pre-market's not looking fantastic to me. What's so this is a low float,
this is
right?
another one. Well, this is another one that the data feed is a little bit off. It says 35 million on trade ideas. It says I don't have float info on FinViz, but the entire shares outstanding says 1.48 million.
Right.
It looks way more like a low float than it does 35 million. It was a big mover, last week. So this is a biotech that is talking about some mRNA treatments for various diseases.
Okay. Just taking a look at its
I don't
chart
see anything
here.
fresh this morning.
No fresh news. Well, it could just be moving on continued momentum from news from last week. We'll see. Again, it's one of these where I'm not so excited about it, but it's moving and it's here. So let's keep moving here. The one with the biggest volume, second largest volume so far this morning is RHE. We'll get to the big one in a moment. Now this, I'm pretty sure, is also a low float.
1.5 in trade ideas. So they did. I don't see anything fresh on this one either.
Wow.
So I don't know if it's a pump and dump or what.
Yeah, I don't know. Again, pre-market not looking fantastic, but for now, until I get better candidates, I'll leave it here. Here's the one that I know, at least in the chat room, everybody's been talking about so far today. OCGN. It's certainly been on our list for the last week or two, maybe. But yes, big volume this morning. 12 million already traded. But the big price action I don't know, has it already happened? Like ever since about 7:30, it's been moving in about a 60-cent range here.
So they have treatments. They have treatments for COVID, and they have been shown highly effective against some of the variants going around, Brazil variant and such. So they're getting pop on that this morning.
Right. Okay. So I see Serge saying new morning show. It's only temporary. Carlos couldn't be with us this morning, so just filling in, and he'll be back tomorrow. All right, let's keep going here. BNTX does not look great at all pre-market. I hate the look of this one, so I'm just going to skip over it unless, Norm, you call a halt. Now
No, I'm in agreement.
I'm starting to see some of our cryptocurrency plays in here. Mara and Riot are on the list. This feels just like normal price action for them. I don't see anything special going on with either one of them this morning. What is Bitcoin doing today?
It's up this morning. Bitcoin and Ethereum are both up, I think 3% and 5% respectively. So some of the crypto names moving on that.
Yeah, I don't see anything special though, guys, in Mara or Riot. So, those are ones that I'm happy to sort of let pop up if midday if they start to move with good sort of consistent momentum where you can actually get a good trade in it. Otherwise, I'll leave them off my list. mRNA, 150,000 shares, up 3%. Pre-market volume does not look that attractive to me. Not seeing anything there. Tilray. Our first pot.
They had some news on some more vaccine. I think they secured some contracts for several 100 million doses going around the world. So that's what's going on with mRNA.
Okay. Well, maybe they'll come into play a little bit more. Not great so far though. Let's look at Tilray. Again, pre-market action's not looking fantastic. They do have 300,000 shares traded up 2.5% almost. Still not excited. Looking for something that's going to get me excited here. BNGO, good old bingo. Bionano? Bionano. Oh, there you go. How would I say it properly? Pre-market looks terrible, though. Don't like it. All right. CLOV, moving on here. Guys, I'm just moving through things. If I don't like them, don't like the look of CLOV. Nothing great there. And our first of our EV, electric vehicle companies here this morning, LI looks absolutely horrendous. Okay, so I've got a few things I could take off my list. I'm going to take the bottom two here in LI and CLOV off the list. I'll leave the rest of these, BNGO's going as well. I'll leave the rest of these to see if they come into play a little bit later as we go through this morning with the pre-market activity. And let's go to our gap downs and see what we got. There's only two things on the list here with VXRT and MVIS. So let's start with VXRT. Now this pre-market actually looks good. We've got fairly consistent price action. Wow, 9 million shares traded, down almost 9%.
They had earnings. They had earnings this morning. Year-over-year declines are hitting them financially. Of course, they also they work on COVID stuff. I believe it's an oral vaccine, orally administered instead of a shot. And they're dropping on their financial results this morning.
Okay. Well, I like the fact there's some news. The price action looks okay. It's traded fairly well. It's funny because look at the daily up until about a week ago. I mean, it's super flat here, really small candles, not much going on, and then we started to see a fair amount of price action. That being said, in all honesty, I don't think I've traded this at all. I know I've been watching it, but I don't think I've found an opportunity to trade it myself yet. So maybe today's the day. We'll leave it here for now and see what it gives us. MVIS is the last one on my gappers list here. Down 2.7%, a little over 500,000 shares traded. Pre-market action looks a little choppy. Boy, it's down a lot from those highs around $27. Is there anything new on MVIS? It's one that's just been generally on our list for the last couple of weeks
I don't.
as well.
Yeah, I don't see anything fresh. I think it's just continued volatility
Right.
from previous moves.
Okay. All right. Well, geez, that's a pretty quick list. You mentioned earnings.
Not a great Monday morning, really.
No. Now you mentioned earnings. So while you were giving us some updates there, I was calling up earnings just to see what we have. I don't see anything that I normally trade here. Just going down the list of things that have earnings this morning. I tend to use earnings whispers just to take a look through what's.
I thought, what is that? Glycometrics was one of your favorites there. GLYC, no?
I don't know that I've ever looked at it. 1 million in revenue. Yeah. That's that looks fantastic. Hold on. Oh my good lord. $2. I didn't even realize the price until I just looked it up, Norm. $2? Yeah.
I don't know. I was joking.
Yeah,
I didn't see anything interesting this morning there either.
That's funny. Like I'm always amazed by these ones that they have. Oh, they only have 14,000 shares traded. Sorry, I thought they had a couple 100,000. I was saying like, well, where's the size? No, they got nothing.
Delete it before anybody gets confused by it.
Yeah, exactly. In the room, guys, I saw somebody mention Twitter. Let's take a quick look at Twitter and see. While the pre-market action does not look great on Twitter, I know they had news last week, but it's not one that tends to like trade, sort of continue that momentum for a long period of time. Big drop on, was this Friday? I guess this was Friday. Maybe, I mean, it's a second day move, potential continuation, but so far pre-market, it's not looking fantastic. That being said, is a NYSE stock, and I always have to keep in mind, if it's on the New York Stock Exchange, it tends to move worse pre-market. You don't get as much of a pre-market action. So, when the bell rings, it could take off. I'm not seeing much of a sign of it yet. But, in absence of anything else too exciting, let me put it on here. Guys, if you have anything else you want me to take a look at, let me know. I see someone calling out Dkng. Yeah, see, I traded Twitter. Corey, I agree with you. He's saying Twitter trades like garbage. I traded Twitter on Friday. I tried to do our sort of Rising Devil trade, and I got chopped up, and I was really not having a fun time with that. So I don't know that I'll be trading it today, but we'll leave it here for now. Dkng is not looking great pre-market either. Very flat. 200,000 shares traded, but very flat price action. And actually has sort of been in a range for the last couple of weeks here if I look at a daily chart. So, this is Dkng for me is one that, yes, it can move and it can sometimes be a good trader, but until it proves that to me, it's not going on my list. I'll let the scanners sort of bring it up. What else are you guys calling out here? CCL, let's take a quick peek at that. Nothing happening pre-market unless we've got some news moving it. It's slowly rising up here, but again, this feels like a scanner play. We've got Tesla. Again, no sign of big movement today. Tesla could very well be a continuation play from Friday. Now, did I trade that? I think I traded Tesla on Friday. I'm pretty sure I did. I remember getting a good trade on that, but doesn't necessarily mean I'll be taking it today. Again, scanners. Plug is here. Same thing, guys, right? Like, and I can tell. Just look at the pre-market action here. Right? When I say it's not good, by the way, it's because I don't have my arrows up, but it's I'm not seeing any sort of consistency in the pre-market activity. We have under 100,000 shares on Plug, and look at all these areas where essentially there was no shares traded whatsoever. Then you get a couple of candles with some shares. So it's really just, it's not showing any sort of in-play type momentum, which means that, it's not to say that it won't trade well when the market opens, but let's wait for the market to open, right? That's why we use the scanners, such that it can help us identify these things, because you can't watch everything. Let me just flip to YouTube, see if there's anything being called there that I've missed. OCGN, sorry, we already looked at. Oh, AMD. Well, I guess I got to look at that since somebody's mentioning it. AMD and Neo. Let's take a look at those. So AMD, look, it's one of my favorites, but frankly, it's not something that I would tell everybody to spend your time on. if I'm objective about it, the daily chart does not look fantastic. It's really been chopping around. The pre-market doesn't look good right now. So again, nothing particularly exciting to write home about. In fact, the volume is pretty low for AMD to have only 240,000 shares at this point in the day. Normally, you should be around 500,000. Closer to 1 million shares coming into 9 o'clock. So yeah, it's not looking like AMD is necessarily going to be in play today. Last one we've got is Neo, 600,000 shares. Again, fairly low for Neo. Pre-market's not terrible. It's funny. Neo's one of those ones that I tend to go back to and take a look at all the time, but it's probably been a couple of weeks since I've actually traded it. And again, the daily sort of tells me that tale. Like it's also been in a range. Now Neo's range is bigger for a price. For a stock that's only $40, it has about a $5 range that it's been chopping through. But again, to me, it's a scanner trade at best, and we'll see what happens. Norm, anything that you like that I haven't already talked about?
I am not really seeing anything exciting now.
Yeah, it's
not this morning, unfortunately. I'm sure something will show up.
It always does. It always does. We are, you're never left with nothing to trade in the markets, everybody. So don't, never panic, right?
Something will pop up.
If you're sitting here and you're like, I don't like anything on the list, then you know what? Maybe you're just not trading the immediate open. You're waiting to see what moves.
Patience.
You're watching the scanners. Yeah, you're scanning the room, right? We got a lot of members who are very helpful in calling things out because everybody's watching something slightly different. It's a great way to sort of expand your reach, if you will, into the market. So, all right. Well, with that, why don't we talk about some announcements? Because we know that we've got stuff happening. Oh. Move this out of the way.
We always have stuff happening, Peter.
That we do. All right, over to you, Norm.
All right, quick weekly rundown that we do every Monday morning. Swing trade discussion with Brian, 2:30 in the afternoon on Mondays. And then, of course, the onboarding class with Carlos, 8 p.m. tonight. I believe Kyle is not going to be doing technology this evening that he usually does, as he is having some issues with his family. So he should be back next week. Tuesday and Thursday, you've got trade reviews with Eamon at noon, success webinars, 8 p.m. the normal time on Tuesday, except for this week will be 5 because of Eamon's time zone, and he is doing that webinar. Psychology, Wednesday at 8 p.m., Thor's group mentorship, Thursday, 8 p.m. Also, just want to point out, email went out yesterday. Andrew mentioned he is going to be doing, he's trying to compete with Thor because he's gotten a little insecure over how well followed Thor has been on Thursday nights. So Andrew is going to be doing a mentorship session after he finishes trading on Thursdays. So, what is that? About 11 a.m. Eastern, and roughly in there. And this week is an exception. He will be in the air flying back from Ecuador to Austin. So he's going to be doing that on Wednesday. So keep an eye out for that. He's going to be going through, that'll be in the webinar room, not in this room. So we'll have our normal stuff going on here, and then he'll do a little mentorship session each week in the webinar room. Next slide. All right. As I said, Eamon's Parabolic Reversal Part 2 series coming tomorrow night, 5 p.m. Eastern. And then you've got Dr. Kenneth Reed talking about monkey mind. We have talked about this chimp mind, monkey mind. That's our psychology webinar this week, 8 p.m. Eastern. Talking about working smart and staying in control. Then next week apparently Mike is going to be doing this webinar at 5 a.m. Eastern time. So that will be 2 in the morning for Mike. Wednesday, handling the emotions of trading next week. Sorry, Mike. You are... hope you don't enjoy sleep. That'll be at 8 p.m. Eastern next Wednesday, guys, to clarify. Somebody made a mistake there. All right. Next slide, please. All right, if you want to participate in the member trade of the day, trade of the week, take a screenshot of your best trade of the day. Of course, have entries and exits on it, and then put any commentary you can on the trade, describing the strategy and why you took it. Post it on Twitter, tag at Bearable Traders, at Mike_BBT, and at NormBBT. Also use hashtags BBT Family. Day trading and stock market will announce a winner each day on Twitter. And then all the trades of the day are eligible for trade of the week, which is voted on by the team over the weekend and announced on Monday on Twitter. Next slide. If you're watching us on YouTube and haven't been in the chat, you can do so at a discount. Use the promo code PREMARKET24 to get a discount off the 1-week trial. That is 7 calendar days, 5 trading days in the room. Does not auto-renew or turn into any other kind of discount. Just cancels after that 7 days. So you can decide if it's a good fit for you or not. And this morning, we have Mindful Monday with Dr. Katz. Dr. Katz, how are you, sir?
I am fine. But let me see. I'm trying to see if I could get my video going here. It's a little.
I will have to take myself off, and you can put your video. You can click on the little camera icon in the room.
Okay, and let's see. There we go.
Awesome. Well, this is a fitting topic. I have not seen you for a week or two, so
a couple of weeks.
Yeah, I've been out and such. So this is actually a very fitting topic this morning because their show's been a little bit goofy with a lack of things that are too interesting to trade. So you're going to be talking about the importance of sense of humor in life and in trading.
Yes. So just a little backstory, Norm. You were not in last week, and Carlos and Peter were there, and basically had a little kind of nice little interplay, humorous interaction with Peter pre and post that. And Carlos wrote that people really kind of loved the banter back and forth, which I also enjoy a great deal myself. So it made me think after last week that, it's probably important to talk about the importance of sense of humor just in life in general and in trading. I thought that would be a good topic, and you guys felt similarly. So let me just dive into this for a few minutes. What are the benefits of a sense of humor? And I think, being funny is possibly one of the best things you can do for your health. You can think of a sense of humor kind of as your mind's immune system. Humor doesn't just kind of guard you against depression. It also improves people's overall quality of life. And, research has shown that people who score highly in certain types of humor have better self-esteem, kind of more positive affect, greater self-competency, more control over anxiety, and really better performance in social interactions. But what's important to remember here is that not all kinds of humor are made equal. People who research this type of thing talk about 4 types of humor. And that is affiliative humor, which is humor designed to kind of strengthen social bonds. Self-enhancing humor, which is basically a humorous view of life in general. Then there is aggressive humor, which is kind of mocking others. And then there's self-defeating humor, which is humor kind of in which an individual incurs jokes that have themselves as the target or self-deprecate. And really the positive results for the impact of humor are only for the affiliative and the self-enhancing senses of humor. So really when you cultivate your sense of humor, it is important to strive for the right kind. It's not really a very good look to make fun of others. But laughter can also improve your health and physical immune system, and it could lead to kind of greater creativity and productivity. And really, and this kind of impacts the BBT trading community, people will enjoy working with you. Humor is a potential stress buster. It kind of creates a cognitive shift in how you think, and it's very humanizing, and it puts others at ease. What it also does is it builds trust. It kind of humor, when we use it properly, it really reveals an authentic part of ourselves, and it really often boosts morale, and it makes you more approachable as a person. So in addition to being linked to health, and the better functioning of blood cells and improve emotional health. Humor plays an important role, of course, in social interactions and bonding. It kind of makes you more attractive, and we could all use that regardless of how we feel about ourselves. So listen, humor reduces anxiety, it reduces stress, and that's where, like, I think for trading it could be particularly helpful. So this is basically my way of encouraging everybody to try to cultivate your sense of humor, not only for managing the roller coaster of emotions that are part of your trading life, but for your overall happiness and day-to-day well-being. So that's the little Mindful Monday tidbit on the importance of a sense of humor in your life.
Thank you, Dr. Katz. Much appreciated. I could not agree more. I think, especially these days, people take things far too seriously. Need to make light of things, enjoy life a little bit, and laugh. So thank you, Doctor. I hope you have a great week.
You're quite welcome. You guys too. Okay, take it easy.
Dr. Katz, are you going to end with a joke?
Peter, no, because probably if I had to do a good little self-analysis, even though we have a nice repartee, I did skew a little to a kind of aggressive humor there. It wasn't that I was mocking you, but I started my little put down by building you up. When I said you were coming off the bench, I tried to kind of get myself out of that hole by talking you being maybe the best sixth man in the league. So I hope I did a good job of getting back in the self-enhancing affiliative humor and not to the more aggressive humor.
A psychologist, a lawyer, and a rabbi walk into a bar. I'm just kidding. All right.
Take care. Okay, guys. You have a good week.
Oh, damn it. I really wanted to know the punchline to that one. All right.
I'd like to continue doing my work here with Bearable Traders, so I'm gonna leave that alone.
Fair enough. All right. Thank you so much, Dr. Katz. We appreciate it. Appreciate you being here with us on Mondays, as always. All right, guys. Let's take a look at some levels here for today, and we'll see what we've got. I will go through both the intraday and the daily levels, and we'll see what we got that are good. So, first thing I do, guys, if you're not familiar, by the way, 8 o'clock in the morning, often we get a wide bar candle. I'm looking at Twitter. Now, it's not the top of my list, but I pulled it up because it's usually a good example. Stocks that tend to have a lot of institutional trading tend to get this bar. So let me just highlight it. You can see it right here, where you often get big wicks, right, and a smaller body happening right at 8 o'clock on a big volume candle. So that's sometimes an indication of a range in which the stock will be in play. Now, in all honesty, I've noticed that this range has been less prevalent. It hasn't really held as well over the last couple of weeks as it used to hold, but it's something I keep an eye on. We sort of call it, with tongue-in-cheek a little bit, the tinfoil line, because it started with a wild conspiracy theory that Thor and I were talking about one afternoon. But what I like to do is sometimes mark the top and bottom of this candle, because I'll find sometimes that sets a range in which the stock will play. Certainly pre-market on Twitter. The reason why I'm pointing it out is because look at Twitter. If you look at where this bar has its top, look what happened. How many times it sort of bounced off or near that top. So it could very well be that this is a range that's in play for today, or it might not. That's why I tend to use a lighter colored line. It's just one to keep an eye on, but I don't consider it as important as the daily levels that you can see marked with the purple lines that I have here, where I sort of keep an eye on daily levels. So just that for reference, if I start talking about marking that 8 a.m. or the tinfoil line, I'll just mark those quickly without further explanation. On Twitter today, I definitely like some of these levels that I've got. I can see here at 74.75-ish. It certainly bounced off of that. That'll keep an eye on. I happen to have a couple of levels that are close together here, around 71.25. So I'll leave that. The only other level that I like in here that might be in play today with Twitter. Whoops, I gotta get my ability to mark levels back here. would be the top of this candle here, which is at 68.36. So let me just make sure my level's at the right place. Let me put it right there. All right, so I've got some levels set for Twitter. Now let's go back to the top of my list on AIH. Remember, I mentioned I'll only keep it at the top of my list if it's looking good. If it sort of picks up momentum, I don't see it picking up momentum. It is still just chopping around the VWAP, which doesn't show sort of a lot of incentive to move the price. Now, look, I don't know what's going to happen when the market opens. It could very well move a lot. But at this point, AIH is just sort of chopping sideways. It is up 32%, so we got to keep that in mind. I'm certainly going to mark the high of this candle here at $9.26. Now, is that an all-time high? It doesn't look like it. If I go back in time, yeah, we certainly had some higher levels that I will mark here. We had 1045. Is that right? 1045? No, 1065. So that level hit the right spot. And if we go back even further, I can see that the price was higher. Well, it looks like when this opened, 1256 would be the all-time high on this after it. I'm having trouble getting my mouse set here. All right, 1256. Looks like after it opened. So it was an IPO about 2 years ago in 2019, it looks like. So that's all the history we've got on AIH. Again, as I said, I'm going to move it down to the bottom of my list because it's not really exciting me for the top, but we'll keep going through here. BTX, again, hasn't really picked up on my list all that much. It is also looking like it might be a candidate if it starts to see some movement when the market opens. Boy, this looks like we're at all-time high, though. We've certainly seen a spike on BTX over the last... Wow, look at this guy. Look, it was really low for years and years and years. And then, ever since... when is this? March? In fact, this is sort of strange. The chart goes up till July, August, and then nothing till March. So I wonder if BTX got repurposed as a ticker symbol. If anybody knows that, let me know. Because there's a big gap on the chart where it did not trade between August of last year and March of this year. So it looks to me like BTX as a ticker symbol probably got repurposed. So anyways, we are at all-time highs. That doesn't make me any more comfortable trading it, to be honest. So essentially, we've got no levels up here. I see my little 8 a.m. candle here. I will mark that just for the heck of it, but I am unlikely to trade BTX today. All right, RHE is the next one. Again, 8 a.m. candle. Oops, I will try and mark it properly. There we go. But I can see that right now we're operating inside Friday's candle, which, oh my goodness, look at Friday. Low of 486, high of $10. So, and the previous day, this thing had closed at $5. So yeah, we're certainly trading in high territory. I can see, look at this. If I go back, December 28th, this thing went from a low of $1.60 to a high of $15.70. Well, there's a warning sign for me about trading this. All right, so not that exciting. I'll put it on my list. If you're a low flow trader, you may love this, right? And you're thinking RHE is the thing you're going to focus on today, and all power to you. For me, it's not the type of stock that I like to trade, so that's why I'm going to put it down here on my maybe list. All right, notice my top list here is getting a lot smaller. I don't have a lot of great candidates so far. OCGN, however, 15 million shares so far traded. The pre-market looks okay. You know, this is the first one that I can say actually looks okay. You notice I've got some daily levels already set at 1396, which we've already passed. I'm definitely going to mark the high of this candle back here, 1877. I really don't think we're going to get that high today, but we may, so let me just mark that properly. We'll see what happens. I see I've got the high of pre-market that's already marked here up at 1465, so we're heading back towards that right now. We'll see what happens. If at the open it shoots above that, this may be a good trade to watch at or just after the open, but we'll see what happens. In the meantime, I've got the highs and lows of the previous couple of days that are already marked in case this thing drops off, which is quite possible. We'll see what happens. BNTX, still don't like it. In fact, the pre-market action looks pretty bad. It's not one that I'm going to... But the daily, though, looks Really good. It's been climbing and climbing here. So you know what? I'm going to put it again down to the bottom of my list. Maybe it's something that we'll watch on the daily chart. We are looking at, is this all-time high? It looks like it. I seem to be out of history here as of, again, late 2019, October or so. Looks like when this thing might have IPO'd. So $200, you know, geez, it's high price. It's not looking great. Don't love it. Okay, well, we'll leave it down there. mRNA, well, this is interesting. Since we did the early first look at it pre-market, look at these candles. This almost looks like institutional trading or algorithmic trading, right? Small candles within a very tight range. It's too high of a price and too big of a range for this normally. Oh, no, wait a second. No, so this is operating in a 40-50 cent range. Very strange candles, though. That is really weird. Sorry, I don't normally see a chart that looks like this. I'm not sure what to make of that, other than to say, it doesn't give me the warm and fuzzies for trading. I'll put a high at the high peak of this candle at 189.26. You can see I put right there. Whoops. I seem to have picked the wrong level. 189.26. There we go. But again, this price action is really a warning sign for me that mRNA, no matter how well it may have traded in the past couple of weeks, may not be something I want to be looking at, especially not right at the open today. Tilray was on our list. We didn't see any specific news on it. We know that they did acquire Afri, or said that they would, so it could be moved based on that. But again, the daily here, look at this daily, like really not a lot of price action. Doesn't look great to me. I don't see anything this morning that makes me too excited. This is one, in fact, I'm going to take it off altogether. It is only going to be in play for me if it jumps up on our scanners or our fine members of the room start to point out that it's really moving. So last one I've got up here on the top is Twitter TWTR. Again, maybe a second day play from Friday. On the daily, I can see where it had this big gap down, right? It could rise to fill the gap. I've got a daily level of 59.28, which is the low of this candle that was put in on the 26th of March. Other than that, as I already mentioned, I marked the 8 a.m. candle. So that, you know what, I'll leave it on my list, because otherwise I'm going to have nothing to watch here. There's only a couple of things. Oh, I noticed I got MVIS on here twice. Only a couple of things that I haven't looked at yet. MVIS, again, pre-market doesn't look great. You notice I've got a daily level already marked, right? It was the high here of February the 16th at 24.18. I'm certainly going to mark the high here right at $28 even. 28 even. Which was set just a couple of days ago here on the 27th of April. We'll see what happens there. I don't really have any expectation MVIS is going to get back to that level today, but you never know. So other than that, the highs and lows of Friday are on here. So that's something I will keep an eye on. And then for a daily level, you know what, I'm just going to put a line down here in case this thing really starts to sell off right at $10. Yeah, just above $10 here, so that'll give me the warning if that thing drops. All right, VXRT said we already sort of looked at that. I've got some daily levels that are in here. Jeez, look at this thing having spiked up, moved back down. Guys, I hate to say it, I'm really not giving you any great watch list. Maybe with that, we'll jump in here and we'll see what our members are watching, because maybe they've got something that will be more exciting. So let me see if I can't do what my good buddy Carlos normally does and try and bring in our list here. See if I can make this happen. Here we go. All right. Put it in over here. And we'll see if this works then. Hopefully you guys are able to see this, and we'll see what our moderators are looking at today. So what I posted up here earlier, that we have no IPOs. It's a Monday, which is not a surprise. We don't normally get any IPOs on a Monday. Jared is watching The financial sector in general, Tesla, NEO, OCGN, and VXRT. I see Thor is going to be watching, just keeping his eye on the market overall with the SPY. Dkng and OCGN is what he likes. Eamon is going to be watching Baidu, BNGO, PDD. On a secondary list, he's got Pfizer, Moderna, and Workhorse, WKHS. Mr. Brian Pesum, the prophet of profit, is watching OCGN, NEO, VXRT, MVIS, and DKNG. So we are seeing some common themes here in the stocks. And Andrew, who's out there, is watching OCGN, NEO, VXRT, and MVIS. I would say they're picking the best of a bad bunch this morning. We'll see what opportunity it gives us. Andrew put a commentary in here. He's looking forward to opening range breakouts on OCGN towards 15. So with that, guys, it might give you some idea of what to trade this morning. I'd like to thank all of you for being here for the pre-market show. And I said, Carlos, your normal host, will be back tomorrow. He just had some personal matters to take care of this morning. And thank you, Norm, as always, for being here on the pre-market show. Trade safe, everybody. And we will see you in the room, hopefully, very soon. Have a good one, everyone. Later, Norm.
Hey, thank you, Peter. And good morning. You're looking good today.
Why, thank you so much. All right, with that, we'll say goodbye to everybody on YouTube. And